Hello, and welcome back to the Mind and Money podcast. I'm Sherry, a financial coach.
And I'm Val, a financial planner, and today we are talking about what you are approved for may not be what you actually have the financial capacity for. And what do we mean by that? Is that if you get a pre-approval or an approval to purchase a house or purchase a vehicle or on your credit card or line of credit, I mean, we could go on and on. Just because you get that approval or pre-approval doesn't mean you should take it. And why is that, Sherry?
Well, because sometimes the math doesn't math. Like it's been a minute since I went through a loan approval, but the last time I did, it was shocking to be like, what? Because both times in our lives for our mortgages, only one of us was on the mortgage and the other was not for different reasons. And I just look back and think, well, that's wild that we were separately individually approved for mortgages when two incomes were needed based on all of the things to cover it, because what they look at versus what life is actually like is very wildly different. And especially in situations where you're looking at a mortgage, and let's not get started on how the mortgage system in Canada is a little messed up, how you have to be reapproved and interest rates could change every 3 to 5 years. And then you just have to handle the extra payment if rates go up. But just because you can on paper doesn't mean you can in real life. So, Val, have you ever seen situations where there has been approval and then you go to look at what it looks like in real life and it's two wildly different answers?
Yes, and I can think of a couple clients where they were pre-approved, they purchased at the top of their budget. So let's say you're approved for a or a purchase price of 600,000, you bought the house for 600,000. Then we were connected and then we looked at the budget, which is not the order you want to do this in, because then we're looking at, okay, here's your incomes. Yes, there's the mortgage, but then there's the utilities, there's the insurances, there's, oh crap, my vehicle just went and I can't buy one outright, so now I have a vehicle payment. There's student loans, like there's you really need to look at the full picture. And part of that, again, we're back to the C word of clarity. What comes in, what goes out. And when it comes to that number, I think we can sometimes get really excited. And then we start, when we go on Realtor, we set that as our price, our purchase price. But we need to think of, okay, in the next 5 to 10 years, is there going to be a mat leave? Is there going to be big life changes or big life expenditures and or just wanting to have savings? So I always urge clients, like, let's look at this as though we have the house. What does it cost us? Because it's not just the mortgage.
Yes. And then that tends to be where your finances go off track, because if you get qualified for a $500,000 mortgage and that's where you purchase, and then you look at your budget, but it's not encompassing the full picture, or you don't look at your numbers and you just assume, well, the bank approved me, I must be able to handle this. And
Yes.
then you get living it and it's really tight. Maybe there's no wiggle room. Maybe there's like, I don't know, negative wiggle room. I don't know if that's a term. I'm just making it up right now. But then something happens. You have a window break, you have a roof leak. And then that's where you have no choice because there's no wiggle room month to month in your cash flow. So then it's a credit card or a line of credit. And then you then have that debt payment, even if it's the minimum that needs to fit in your budget. And it's just keeps exploding from there, which then tends to lend itself to, oh, it's time to renew our mortgage. Let's refinance and roll this debt in. And then I hear from mortgage lenders and clients, potential clients, that then becomes a rinse and repeat. And you're continuing to use the value of your home, and then you never get closer to paying your mortgage off, especially right now when we're in the cycle of home values are not increasing and in fact decreasing in some areas. Then that becomes a stopping point. So if somebody's listening to this and they've got a pre-approval, or they've got approval for a car loan or a trailer loan or a
Mhm.
boat loan or a quad loan, but they haven't signed on the dotted line yet, and now they're like, oh shit, I don't know if this fits. What should they do?
That's a great question. And when it comes to those other loans, say outside the mortgage, we also have to look at those other loans impact our ability to qualify for a mortgage because now our monthly income it's got more jobs to do. So those debts impact that bigger picture too. I have a lot of younger clients and they bought the truck or they bought the quad and or both. And then when they want to buy a house, they're surprised to learn that, oh, those debts impact me. So when it comes to, okay, I've got this pre-approval, I think you have to go through a bit of that process of like need versus want. Is this something that I really want? How fast can you pay it off if it's at a higher interest rate? Something like a quad, we can pick on that for a second. So if it's a $20,000 quad loan, need versus want, what's the interest rate? What's that going to do for your monthly cash flow? And let's say it's a 5-year loan. Is there things coming up in the next 5 years that you're going to say try to purchase a house or something like that? Or can you structure it so you're doubling up the payments so it's paid off faster if it's something that you really feel you want? Or if the quad can wait until 2028, can you put that money aside and then buy it outright and probably get better, I'll say a better deal because you are able to go and purchase it outright potentially. So when you're like facing that offer, you have to look at, okay, if I've got that vehicle loan, how is this going to impact me? Yes, the need is a reliable vehicle now, but is it a $45,000 vehicle or can we find it for less? Now, typically, used vehicles that cost less have a higher interest rate. So it's weighing out the pros and the cons and seeing how is it going to impact me on a month to month, because a lot of the times when we add in those monthly payments, our lifestyle doesn't necessarily adjust. So then we end up in that cycle where, okay, it's on my credit card now. The credit card keeps growing where I was maybe able to clear it off before. What's happened? Oh, $500 a month is going towards this vehicle payment. And I didn't necessarily account for that.
Yes. And really looking at too, okay, I'm going to extrapolate on this, but first, let's do a vibe check. When you think about how you feel right now about your money and more specifically your cash flow, which we could, like, I think there's another episode on that, or we could dig into that a little bit later. But how does it feel right now? Maybe you're paying a $2,000 or $2,500 rent payment, or you've got a $200 car loan, but you're looking at a $3,000 mortgage or a $600 car loan. How does cash flow feel now? Does money feel tight? Do you feel strapped? Do you have credit card debt or line of credit debt that is slowly creeping up or has been hit with large expenses? And if that's where you're at, I want to challenge you to, if your debt is creeping up right now and you're thinking about adding more pressure to your cash flow every month, probably we want to take a pause and think about, can I live like this extra payment would require me to live? That's
Yeah,
$500 extra a month. Can you start putting that away into savings or putting that $500 extra over and above your minimum payment on your debts and still live? Because there's so much pressure to have a certain car or have a certain house, big purchases. But is that the life you want? Or do you love to travel and you want to keep those typically largest payments in our monthly budget? Do you want to keep them smaller so you have more money to travel? It's like, what are these contributing to the life you want or taking away from them? Because that's really an important consideration to look at. Like, are you doing it
yeah.
because it's something you want and value, or because society wants you to value that?
Right. And that's bringing it back to that pause of like vibe check, pause. Is this really aligned for me? Or is it because all my buddies got a side by side? Now I really want a side by side. Like, is this truly what I want? And I had that with clients where they were really itching to move, bigger house. And I said, okay, money is already tight, and we know this from working together, or it feels tight. So let's try a challenge. Let's put whatever we figured out what that new mortgage payment would be, and then their old mortgage is obviously continuing. So we're putting the difference away each week as a challenge to say, okay, let's do this for a year and see how that felt, because that's what that new house will be. And can we do that without incurring other debts and still putting the kids through their sports and still doing the things that you want to do as a family and continuing to work and the dogs and all of those things? So it's kind of giving yourself that trial run before it's a, no, you need to make your mortgage payment non-negotiable.
Yeah, and that trial period can help you build an emergency savings, help you pay down your debt, help you do a lot of the things that you maybe want to do right now. But a lot of what we're talking about is like executive function and pausing and not being impulsive. And for folks with
Hmm.
ADHD, that's difficult, especially when we tend to be in avoidance mode with our money. So then we can just put trust in whatever financial professional told us we could get the loan for whatever thing. And then we end up in a disaster where maybe we're having to sell a quad that costs $20,000 for five, just try and get out from under some of it. So I
Right.
know the executive functioning part of managing money is so hard, and the motivation to get started can be so hard. And finding what works for you can often start with going back to, what are my values? What's important to me? What life do I want to build and live? And
Yes.
thinking, does this thing add or take away from that? And if you are an outdoorsy hunter, birder, although the birders probably aren't getting the loud
Too loud.
four
Yeah. You're
wheelers,
right.
but
You're right.
like, what do you want to be doing in your spare time? And often,
Yes.
if you have more going out than coming in, you don't have spare time. And really, time's the one thing we can never get back. And after living in a period of my life where I worked overtime up to the wazoo, I
Hmm.
now see that that I was forcibly removed from that. That the flip side of things, where you've got more flexibility and more time because of less financial pressure on things, that's my main focus, to have flexibility of time. So every financial decision is like, what does this mean time wise, flexibility wise, for me and for my family, and all of those things. Like, yeah, time as a family is something that's really been a focus. Basically, like, how can I spend more time with my kiddo? And that often
Yeah.
is a higher expense because we have to travel because they live far, far away. Yeah, what life do you want? I know this is like overdone, but like, what's your why? Why
Hmm.
are you wanting to do the thing?
Yeah. And creating that space in the decision making process to reflect on that, because it can sometimes like get you so wrapped up in excitement and emotions and impulsivity. And then the dust settles and you're like, oh God, what have I done?
Yep. And often
So,
the cost to undo it is even
mhm,
more expensive than the cost to get into it.
yes.
And what I see a lot too when I start working with new clients is they've tried budgeting before, a money management plan, whatever resonates with you. And they've often abandoned them or given up on them because they weren't perfect.
Mm,
The budget's never going to be perfect. No plan can ever be perfect because we don't have a crystal ball. Like, what are the gaps? So if you think about, well, last time I tried to budget, what happened? What financial setbacks were there? And how can you revisit a plan for your money that includes those?
yeah.
When you think about those situations for your clients, Val, like, what are some of the situations that have like been the get off the rails, like throw your hands up in the air, budgeting doesn't work reactions, and like kind of what things can help navigate those?
So I think it's been where they've made a budget that's been way too restrictive and they've set themselves up for failure in the sense of like not using realistic numbers for things like groceries and fuel, where yeah, we can definitely have waste in different areas. But when I'm looking at it, I'm going that there's no way that's enough. So then they're reaching their maximum 3 weeks in and going, okay, well this doesn't work, but it doesn't work for them. I've also seen it again in that like extreme cutting back piece where they've taken out all space for like joy or things for themselves that they might enjoy, like a hobby. And it doesn't have to be expensive, it doesn't have to cost anything necessarily, but some of them do. But when they strip it right back and go to one extreme, then we typically kind of slingshot our way back to the other side because we're like, well, this, I was miserable, I didn't like it, it doesn't work for me. So when we go too far to one extreme, and with other clients, I've seen them kind of fall off the rails with budgets when it's not in alignment with what they actually want and how they live too. We have to be realistic to what we're doing. If you're saying, oh, I spend, $10 a month on takeout, but we're doing travel hockey and we're going through the drive through multiple times, something's not adding up here. So actually looking at the numbers, I'll say before you build a plan that just sounds like it should work really well, but it doesn't, then you get defeated and then you think, well, budgets don't work for me.
Yes, for folks with ADHD, we tend to do this with so many things. And I see it a lot with money too, is we build a plan on a Saturday or a Sunday or the last day of one month that requires us to wake up on Monday or the first day of the next month and be a completely different person than who we are. We think, okay, this new car payment will fit in my budget but there's no Amazon, there's no online late night impulse shopping. And that's maybe sustainable for a very short period of time, but not long term, because who we are as people and what we do and the habits we have, we can't change those all overnight. We can work on them and we can improve them. But we can't just be like, "Oh, now impulse shopping, perfect, that car loan fits, hit buy and sign on the dotted line," because that's a problem for future you.
Yeah, we've got to pretend to know ourselves here, okay? We know how things come up, and we can't just in the moment convince ourselves that, oh well, I won't do that anymore, just so it makes sense over in the other category of, say, car payment. We have to be realistic and be your own best friend. If you wouldn't recommend your friend doing it knowing their numbers because you're like, ah, things are already a little stressful for you, coach yourself through it, really think about it. And salespeople it's always going to feel important and scarcity, and take the space back from that to be like, okay, I just need some time to make a decision.
Yeah, it's the last car on the lot. There's other
Oh,
buyers showing
yeah.
up to look at the property
It just
tomorrow.
came in
You'll never
today.
get one at this deal. Yeah. And
Yes. Yes.
that creates the urgency and the scarcity. And they do that because they know those tactics work to get us to take actions without giving them as much thought. We live in a world that's designed to do things like that.
Buy
And
now. Buy now. Yes.
I just encourage you to try and think about future you. I know time perception is often a challenge and future you doesn't feel real. So sometimes giving her a different name, thinking about where she's at, what she's doing, and how the financial decision you're making today
Hmm.
could impact her in either a positive or a negative way. And put yourself in future you's shoes and think about, do you want to strangle yourself or like give yourself a high five based on the
Yes.
decision you're about to make?
So we encourage you to, in making those decisions, in getting those exciting approvals or pre-approvals, step back, don't sign on the dotted line, see how it fits for you financially and in the big picture and the vibe check.
Yep. And just real quick sidebar on cash flow. A budget
Hmm.
is great. A budget is like, this is the plan it will change, but it's more of a static plan for your money. And then cash flow is how we extrapolate that to be like, when do you get paid next? What bills have to be paid before you get paid next? What other household needs, groceries, gas before you get paid next? And then what does that leave you left over? And then do the same thing next pay cycle and the same thing
Yes.
next pay cycle and start to really see, is there wiggle room
Yep.
or is it too tight? And one thing that makes this 100 times easier is to pull out those daily transactions. So think about everywhere you tap your debit or your credit card and separating those from your regular cash flow is like one transaction where you're using a separate account or whatever strategy works for you versus like $72.96 at the grocery store, $42 on gas. It just eliminates a lot of the administrative work, which is then a resistor to us making changes with our money a lot of time. So if you've got that plan in front of you to do a big thing with your money that's going to add to your expenses every month in a pretty significant way, take a pause, look at your numbers, think about how you feel about your money and your cash flow now, and think about how you'll feel if you add this extra stressor to it. And if it's adding or taking away from the life you want to build, because, and like, is there an alternative?
Yes.
I know absolutely nothing about quats, but I imagine there's a used market. Can you buy somebody else's used one for half the amount? I don't know. Maybe that's not
Probably.
realistic, but
Ah, that's probably realistic.
use your creative brain and think about like how can you achieve that thing you want to achieve in a different way that's maybe less of a financial impact. So, yeah, just because the bank says you can doesn't mean you actually can and doesn't mean you should without taking a little bit of time to pause and reflect to your overall finances. So, and we're not here to say no, we're not here to shame. We're just here to encourage you to look at the big picture and think about how it will impact your life overall. We will see you next time on the Mind and Money podcast.